Hello, welcome to the European Open briefing for Monday, April the 24th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the main headline this morning is, of course, the French election result of the first round of the presidential vote in France. So it was good news all around for the markets as the centrist candidate Emmanuel Macron came first in yesterday's vote, and Marine Le Pen, although she did get through to the second round, her share of the vote wasn't quite as high as some of the polls were indicating. So that boosted the euro, which surged to 5-month high, and the yen is broadly down this morning. As the French vote has given risk appetite quite a big boost. The dollar also is benefiting from this. It's back about the 110 yen level. Although the main focus now for the US market is the tax announcement that's due to be made this Wednesday. And in other currencies, the pound is one of the weaker currencies this morning, as the last Friday's disappointing retail sales numbers continue to weigh on the British currency. But let's start with the euro. We can see that big gap in today's open in Asian trading. It hit a 5-month high, 1.0919. It's eased a little bit since then to around 1.0850. And we can see here the numbers. The centrist candidate Emmanuel Macron, he got almost 24% of the vote, and Marine Le Pen, the far-right National Front Party leader, she got 21.4%. So that's a more than 2% lead for Macron in the first round, and this boosts his chances of winning the second round. That's going to take place on May the 7th. And Macron is of course favored by the markets because not only it would end the uncertainty about whether or not France would remain part of the euro or indeed even part of the European Union, given Le Pen's strong anti-euro views. It's also Macron. Some of Macron's policies are pro-growth, such as he wants to make reforms to the labor market, and also he wants to carry out some deregulation. So all of that is seen favorably by the markets, and that's why we're seeing the big rise in the euro, not just against the dollar, but also against other currencies, particularly the yen. The euro-yen jumped by over 3% earlier today, before easing to be up just by around 2%. The yen is down against all major currencies, even the pound, which the pound is actually lower against other currencies except for the yen. And gold also fell back because of the improved risk appetite. It's at a 2-week low, currently trading at around 1,270. Major equities were somewhat mixed, though mainly it was Chinese markets were down. Other major European stock indices were sharply up, and European and US stock futures also point to strong open in Europe as well. Moving on to the US dollar now. The dollar yen is doing well. It rose above the 110 level for the first time in 2 weeks, but the dollar index is down though, and that's mainly due to the euro's gains versus the greenback. What's not going to be in focus now for the US market is a tax statement coming on this Wednesday. The President Trump did actually tweet that there's going to be big tax reform and tax reduction that's going to be announced by the US Treasury Department, and it is hoped that there will be some more concrete details on the proposed overhaul of the US tax code that's expected at some point later this year, because that's been the main reason why that triggered the US dollar rally after the US elections back in November. And also worth mentioning that we've got US GDP numbers for the first quarter on Friday, so that will also be watched. Moving on to the UK pound now, we can see the pound did spike upwards briefly on the back of the French election results, but it sharply fell back. It's currently trading at around 1.2780. Retail sales in the UK disappointed on Friday in March, and overall in the first quarter, the UK retail spending fell at the fastest rate since 2010, and that's likely to have negative impact on first quarter GDP growth for the UK. That's out on Friday as well. So if the GDP numbers are much worse than expected, we could see further declines for the UK pound. And a quick look at oil prices now. Last week, of course, there was a big drop in oil prices on the interesting signs of rising U.S. production and U.S. inventory still being near record levels. We had the Baker Hughes oil rig count out on Friday, which showed that U.S. rig counts continue to rise. They rose to another two-year high at the end of last week, and that's weighing on the overall prices in the oil market because, of course, it's offsetting the cuts being made by OPEC and non-OPEC, and they're due to meet in May to discuss whether or not they want to extend the current agreement for a further 6 months. It's looking increasingly likely that that will happen, and that's given a bit of a boost to prices this morning. Although US crude didn't manage to break above $50 a barrel, and of course the overall risk appetite is also helping crude oil prices this morning, but only very modestly. Looking at today's economic calendar, we've got German IFO numbers coming out shortly, but it's going to be pretty quiet for the rest of the day. We don't have any major data expected, although we're going to have Fed Speaker Neil Kashkari. He's a voting FOMC member, so that might attract some attention. That's it from me. Thank you very much for watching, and have a great day.